When it comes to dividend income, there's a lot of information that often gets overlooked. So in this video, I'm going to do my best to cover what dividends are, their payment frequency, basically what you should know, and we'll look at some hypothetical examples if you decide to do some dividend investing. So what is dividend income? Dividend income is a portion of a company's profits that is paid out to its shareholders. Think of it as getting a little bonus for owning stock in a company. Not all companies pay dividends. Those that do tend to be more established and more financially stable. Now, most companies that pay dividends do so quarterly, meaning 4 times a year. Some companies do pay monthly, while others pay annually. The frequency is determined by the company's board of directors. Now, here's some important things you need to know about dividend investing. Dividends are not guaranteed. Companies can reduce or eliminate them based on their financial performance and future outlook. Also, dividends can actually be reinvested to buy more shares, accelerating your wealth growth through compounding. This is what I actually do with my index funds and ETFs that I hold in my taxable account. I just reinvest those dividends. Something else you should consider, dividend income is typically taxable in the year it's received. I feel like this is one detail that gets overlooked often, but I want you to know that those payments likely will come with taxes that you will owe. Now, something else you probably have noticed if you have started to get interested in dividend investing are the different yields. Dividend yield is the annual dividend per share divided by the share price. Higher yields aren't always better, so do consider the company's financial health and sustainability of the dividend. The last point I want to make about dividends before we get into our hypothetical scenarios is the adjustment of the stock price. When a dividend payment is made, there is an adjustment to the stock price at market open on what's called the ex-dividend date. This is the first business day after the stock dividend is paid. So if a company's stock closed at $100 and paying the dividends will cost the company's $3 per share, it will open on the ex-dividend date at $97. That's another important detail, especially in the debate in the personal finance space between those who push dividend investing versus those who would just rather reinvest the dividends. All right, before we dive into examples, a crucial reminder. I am not a financial advisor. This video is for educational purposes only. Investing involves risk and you could lose money. Make sure you consult with a qualified financial advisor before making any investment decisions. So we're going to go ahead and assume a hypothetical average dividend yield of 3% for these examples. Keep in mind that actual yields will vary depending on specific investments. And this is a simplified illustration and doesn't account for compounding, reinvestment, or tax implications. And we're also going to assume that the portfolio is fully invested in dividend paying assets. Let's take the first portfolio of $10,000. The annual dividend income is going to be $300, and the monthly dividend income, you take that $300 divided by 12, and that's going to give you $25 per month that you would be able to earn from your monthly dividend income payment. And if you want to know what the quarterly dividend income would be, just take that $25 multiplied by 3, because 3 months make 1/4 of a year, which means you multiply that $25 by 3 months, and that gives you a quarterly dividend payment of $75. The next portfolio of $50,000, the annual dividend income is $1,500, and that monthly dividend income is going to be $125. Again, to know what the quarterly dividend income would be, just take that $125 multiplied by 3 and you get $375. Portfolio 3 of $100,000. Your annual dividend income is going to be $3,000 and your monthly dividend income is going to be $250. And if those dividends are being paid on a quarterly basis, that's going to be $750 per quarter. Now let's move on to portfolio 4 of $500,000. Your annual dividend income is going to be $15,000. Your monthly dividend income is going to be $1,250. $1,250 per month is definitely not something to sneeze at. That's pretty respectable, but you can see how much you need to be able to get that dividend payment of $1,250. Now on a quarterly basis, you can expect to have $3,750 for that $500,000 investment portfolio. Now the last portfolio of $1 million, your annual dividend income is going to be $30,000. Pretty impressive. Your monthly dividend income will be $2,500, and if it's paid out on a quarterly basis, you can expect to have $7,500 in dividend income paid on that quarterly basis. Now, before you go off and start embracing this dividend investing strategy, here are some important considerations. Reinvesting dividends can significantly boost your returns over time. It allows you to buy more shares, which then generate more dividends, creating that snowball effect. Also, don't just rely on a few dividend-paying stocks if that's something that you're interested in. Diversification is key. Diversify across different companies, sectors, and even asset classes, whether it's bonds or real estate, to reduce risk. But if you are looking to enter this world of dividend investing, look for companies with a history of increasing their dividends over time. This can lead to higher income in the future. And remember, dividend income is taxable, so factor that into your financial planning and know that qualified dividends are taxed at a lower rate than ordinary income. Now, building a dividend portfolio is going to require research. Thoroughly research companies before investing. Look at their financial health, dividend history, payout ratio, meaning the percentage of earnings paid out as dividends, and future prospects. Also, consider ETFs. Dividend-focused ETFs can provide instant diversification and make it easier to build a dividend portfolio. Look for ETFs that track a diversified index of dividend-paying companies. One popular one is Charles Schwab SCHD. And I will say, start small. You don't need a lot of money to start investing in dividend-paying stocks or ETFs. Many brokerages allow you to buy fractional shares. And as someone who loves passive investing, I probably would lean towards those ETFs we talked about that track a diversified index of dividend-paying companies. While the examples that we just went over show potential income, remember that investing is more than just numbers. It's about achieving your financial goals. Dividend income can be a valuable part of a well-rounded investment strategy, but it's not the only factor to consider. Consider your overall portfolio, including growth potential and risk. Even established companies can cut or eliminate dividends if their financial situation changes. Stock prices can fluctuate, impacting the value of your portfolio. Dividend investing is not without risk. So do your research and understand the companies you invest in. So I'll say this, dividend investing can be a great way to generate passive income, but it's essential to understand the risks, do your research, and diversify your holdings. Personally, I wouldn't just rely on dividend income, and I would make sure to consider my overall financial goals. Now, there are some things I wish I knew about investing that I talk about in the video on the screen. Make sure you click that or check out the video that YouTube is recommending, and I'll see you over there. Peace.